So the next thing is the concept of dollar cost averaging. Basically, I'm very brief about this. We're going to be using this in our live trading a lot. Dollar cost averaging, what does it mean? Both in long term and trading, dollar cost averaging means, let's say I have $1,000, like I already mentioned. I break my $1,000 into 5 places. I break it into 200. Each batch a $200 batch in 5 places. That's dollar cost averaging. You simply break your money into bits. You don't have $1,000 and carry your $1,000 and invest in the market or use it to trade. You break the money down into portions. With the example that I just used, that's basically the concept of dollar cost averaging. We're going to be applying these concepts in our live trading. The next thing we are going into is spot trading. I'm going to go into Binance here, and I just want us to see how it works. Now, I want to spot trade. Spot trading means I buy a coin. I actually own the coin. Just oppose this with leverage trading. Leverage trading, if I buy a leverage contract, I don't own Bitcoin. I just own a contract. I bought a contract. We'll understand what that means later on, but let's focus on spot trading here. So in spot trading, I actually buy the asset. In the example I'm going to use Bitcoin. I actually buy the Bitcoin. I buy the Bitcoin. So now, this is Binance, a centralized exchange. I'm going to click market at the bottom left of the screen. We'll click market. I'm going to click BTC USDT. I'm going to click that. Now I'm going to click buy. Now I'm going to click this place called market so that I can explain certain things that is relevant to us. Now you can either click limits, or you can click market, or you can click stop limit. But we are going to be dealing with basically limits and markets for the purpose of this class. What does limit mean? Now, when you want to spot trade, limit means that you can choose to buy. Let me put it on limit for the purpose of clarification. Limit means that you can choose to buy the asset at a predetermined price. I can say that, okay, in my trading or my long-term investing, I do not want to buy at 104,827 right now. I want to buy at 90K. So I can set the price at, okay, I set O. I can come here and set O at $90,000. I want to buy Bitcoin with all I have here. And I click buy, and you can see the order is set. What this means is that it has automatically set it for me that at 90K, the trade or the purchase will be automatically done. I'm going to cancel that now. I'm going to go to market. What market means is that basically we are going to buy Bitcoin here at the current market price. The current market price, we're going to buy Bitcoin. That's basically what market means. So I'm going to execute that for us. I'm going to buy, let me say, $100 worth of Bitcoin. We'll click buy Bitcoin and order created. It has done automatically. If I go to my asset column here, it will be reflected here that, oh, I own $100 worth of Bitcoin. Then if I want to sell, the reverse is the case. I click sell. I sell. Okay, this shows that I'm going to sell 100% of the Bitcoin I have there, and I sell everything, and I've sold it all. So basically, I'm back at where I was. Now, that's basically it for spot trading. Now, there's also something I want to show us. It's called convert. Convert is a bit more simple, but you pay more fees for convert. When I did that spot trading, they charged me a fee, but the fee is usually inconsequential, depending on the amount of money you are using. The fee would be a lot. We can see that. Let me say I want to convert USDT to Bitcoin with this convert function. You can see it's basically clear. Let's say max $104. If I click preview and I click confirm, that's it. That's just the purchase. It looks very simple, but you pay higher fees for this. You pay for the simplicity through fees. So you are best to stick with the first method that I showed us.